Netflix falling today following its Q2 earnings last night. The company missed on international subscriber growth and lost US subscribers for the first time since 2011. But despite today's drop, research shows it could be a temporary blip. According to Kensho, of the 11 other days Netflix has fallen by more than 10% in the last decade, the stock ends up rebounding 3 months later by about 12%. Could this quarter's earnings miss make it a buying opportunity for the year ahead? Let's bring in Michael Graham from Canaccord and Victor Anthony from Aegis Capital. Victor, I'll start with you. You're bearish. You think it's time to take profits?
I do. I do think there were several red flags that was raised in the second quarter results that I think will keep the stock range bound over the next several quarters. The first being, this is the third consecutive quarter that Netflix has guided below consensus on the domestic sub numbers. And so what that means is that there's some dynamics, changing dynamics in the domestic market that the management team doesn't really have a handle on. That's one. Number two, the aggressive price increases, that led to churn in the quarter. And I think that punches a hole in the bull thesis that even with the latest price increases, there's pricing power in the model. The CFO recently stated that he sees a $25 price in Nirvana. I think that'll be difficult to achieve longer term. Third, we have been conditioned to believe that Netflix is not a hit-driven business. The company has conditioned investors to believe that. Guess what? It is a hit-driven business. And like every other hit-driven entertainment business, I think investors should start evaluating Netflix based upon that. And so that has changed, I think, meaningfully in the quarter. And fourth, lastly, the company stated that, competition wasn't a factor. But, what happens when competition does become a factor? When all these different competing services launch over the coming year? That could be a meaningful challenge, I think, for Netflix in their ability to grow subs. And yes, can these competing services be just complementary? Maybe. Can these serve, can consumers pay for multiple different streaming options? Mm-hmm. I've seen surveys say that they can, but we haven't really tested that in the market yet. And so that's an unknown, that's an uncertainty in the model. And part two to that is that they're losing some really, good content, popular content, The Office and Friends. And yes, Netflix is basically saying that second-run content, doesn't really lead to gross ads, but churn could possibly be an issue. And so that hasn't really been tested yet. And so there's a lot of uncertainty.
Michael, you take the other side of this debate.
Well, I do. There's no doubt that as we get into next year and we start to see some competitive streaming launches, there's no doubt that the market's going to become more competitive. I think it'll quickly coalesce into a competition around content and around, widespread distribution on, set-top boxes and through different services. I think Netflix is going to do very well in that content battle. There's no single show on Netflix that accounts for more than 2 or 3% of the streaming hours. So, it's really, hard for me to see a scenario where, consumers are sort of anticipating the loss of Friends and anticipating the loss of The Office and saying, okay, well, I'm going to cancel my Netflix subscription. To us, this miss on this quarter was a combination of a couple of things. I think number one, it's just hard to forecast. The company typically will forecast exactly what they think they're going to do, unlike a lot of other companies which tend to forecast conservatively and then beat it. Number two, they had a very strong first quarter where they added 7 million net adds internationally, and that is something that's tough to repeat, and it could be that there was some pull forward there. In general, we just take a step back and look at, there are some competitive forces, but the bigger thing that we see, the bigger transition is that viewing habits in the US and around the world are moving from traditional pay TV models to streaming models. Netflix is still only about 10% of all viewing time in the US, and it's way less than that internationally. So there's a ton of viewing that needs to migrate over from some of these older models, and that to us is the overriding factor. Certainly we're going to see more competition in the near term, but we think Netflix is going to do very well, and there's a big tailwind to the market behind them.